Speaking of bad, what does a national debt surpassing $37 trillion mean for you? Well, on Tuesday, August 12th, the United States national debt surpassed $37 trillion for the first time ever. The debt is growing at about $6 billion per day, but that appears to be better than last year.
Yeah, and in July 2024, the national debt passed 35 trillion, and then November 2024, it passed 36 trillion. So looking for some positives here, it did take 9 months for the debt to grow another trillion to the $37 trillion mark, and also too, that percentage gain is smaller because the numbers are getting bigger.
Yeah.
So, at least that debt accrual is maybe slowing down a little bit.
Yeah, like $6 billion a day, that's about a little over 4 months that it would hit the next level, based on my quick math there.
Yeah, what was that, 30 times 400? Yeah,
something like that. So, and at the end of the second quarter, another important thing, debt to GDP stood at 119.4%, which is manageable, but we really don't want it to go much higher than that. We're getting to a level to where we can hopefully see a slowdown in debt expansion, or maybe even a reversal, and still have the increase in the GDP. That'd be perfect. That'd be the optimum we want, is a reduction of the debt and still have GDP grow. That'd be great.
Yeah, and you get to this kind of spot. I mean, generally you want national debt. It's good. It's a good thing for people to invest in. You're not going to have a national debt at zero, but we've gotten, I think, so debt heavy from COVID that it might not hurt to again, maybe have a reduction in that debt as we move forward. And the reason is that, having a high national debt, it's negative. It takes investment out of the private sector because people have to be buying that national debt. I mean, as I said, it's an investment for people. If you're not putting it into the national debt, you can put it into other avenues, which that could slow down the growth in the economy. And also, too, a large national debt can cause interest rates to increase, as the need for more debt often means offering higher interest rates to attract buyers. It shocked me when rates were, 1-2% that anybody was buying that, but, you shouldn't be. I mean,
right.
I don't know why you would buy debt at 1-2% unless you thought but even if you thought the economy was going to go to zero, you wouldn't be buying debt because it'd be useless. It just made zero sense. So you need an attractive yield on it so people will buy it. But, that's the concern is, at 4 or 5, I mean, that's kind of, not a awful deal. That's where it might need to stay to have buyers have interest.
Yeah, I mean, there's a lot of problems to it, and I don't like it coming out of the economy because that will slow down our growth. But it is something that needs to be looked at, needs to be addressed. I know the current administration is trying to do things, but gosh, it's just and raising taxes, that is not a positive. That will hurt the economy more, and then you get less revenue.
Well, because you get less GDP growth.
Yeah.
And then, you get less revenue, you get less GDP growth, so then your debt to GDP could even skyrocket more than you thought.
Yeah, it is something that you want to be careful of, and hopefully they will fix this for us.